In this video, I'm going to show you how to use an indicator called Williams percent R for mean reversion trading. This is another strategy which I created over 3 years ago, and I documented it here on YouTube. Since creation, for the last 3 years, the strategy has continued to make money, and in this video I'm going to show you the performance report in detail. So if you're interested in mean reversion ideas which work, then hang around and let me show you one of mine. I'm going to show you two strategies, as in the original video. They're very similar to each other, just having different exits. They both work on pound-dollar on the 30-minute chart, and one of them holds on to trades just until the end of the session, while the other one holds on to trades much longer, having an average trade duration of about 9 days. Trades are very simple to identify using the Williams percent R indicator, which is an oscillator, a little bit like stochastics or RSI. I'm going to show you how the strategies have been doing for the last 3 years, and then I'm going to show you a very slight modification, which is a very worthwhile improvement. So let's go and have a look at exactly how this strategy works. As I said earlier, this strategy works on the 30-minute chart of pound-dollar. We're going to be using the Williams percent R indicator, and we're going to be setting the length of that indicator to 10. So number one, for a buy trade or a long trade, we want to see Williams percent R under 10 or less than the lower 10% of that indicator. Once we see that, we buy next bar at the open. And for a short trade, we want to see Williams percent R above 90 or in the upper 10%. Then sell short next bar at the open. But we've also got a trade window. We're only going to take trades if they occur between 1700 and midnight Eastern Standard Time. We are also using some trade filters, and they're weakness and strength filters. So we only go long if yesterday was down by 0.5% compared to the day before. So we've seen a bit of weakness on the daily closes as well as a bit of weakness on the 30-minute chart. And we only go short if the high to the open of today is greater than 1.5 times the high to the open of yesterday. So we've already seen a bit of strength today. And the trade exits, number one, we've got a stop and reverse. That means that if we're in a long trade, for example, we only get out of that long trade when we get a trade signal to go short, or we hit the stop loss. And vice versa, if we're in a short trade, we only get out when we see a signal to go long, so we exit the short trade and then enter long. And number two is an exit at the end of the session, so that's going to make this strategy like a day trading strategy. Trades will last less than 24 hours. And stop loss is just a fixed 250 pips. Looking at an example on the chart, down below we have our Williams percent R indicator, and like I said, it's an oscillator, a bit like RSI or stochastics. And I've got these horizontal green lines, and one of them is set to 90 or the upper 10%, and the other one set at 10 or the lower 10%. The range does go from 0 to 100 on my charts, on multi-charts, but on some of the other charting packages it is slightly different. But you just need to know the upper and the lower 10% of the range. And we can see here that Williams percent R has crossed below that lower 10%, and we've entered a long trade next bar at market. What you'll also notice is that we are in a long trade, but then look, here we've got an entry signal to go short. The reason we didn't get out of the long trade and reverse our position to go short could be one of two reasons. A, it could be not within our time window, and if we look, it isn't in our time window. We see how the day crosses over there to the 21st, so here is about midnight, so this is after midnight, so we wouldn't take this signal. And B, the trade filter might not be in place. We might not be allowed to take short trades because of the trade filter. So that's why we stay in the long trade, and then on this one we currently have the end of day exit switched on, so we exit at the end of the day. Okay, so that's an example. So let's go and have a look how the strategy's been performing since I created it. In this first workspace, we're looking at the trade exit, which is the multi-day hold. So we're looking at the stop and reverse exit. And I currently have data from 2008 through to the 19th of Feb 2024. I originally developed this strategy in very early 2021, so we've got about 3 years worth of unseen data. Looking at the performance report, that's what the equity curve looks like. We've got a large average trade value at just over $220, that's 22 pips. And looking at the annual period analysis, we can see that 2021 wasn't a great year. 2022 was a small losing year as well, but then it really took off in 2023. We actually had the best year yet over all the backtest data. And then 2024, we're only 4 trades in, but we are making money at the moment. Let me just adjust the data so that we can see just the out of sample data. So if I go from January the 1st, 2021 through to Feb 2024, all of the trades we see on the chart here are after I developed the strategy. Looking at the performance report, we already know those numbers. That's what the equity curve looks like. I mean, certainly not the smoothest. We could see that looking at the annual period analysis and how much money it made each year. But we can see that currently, the last trade was actually showing new highs. If we look at the total trade analysis, we can see that the average trade is actually larger than over the whole period. So that tells me that the edge in the last few years has actually got stronger. So the multi-day hold version of the strategy has continued to make money. It's not the smoothest of equity curves, but performance has really picked up recently. Next, we're going to look at the day trading version, where we exit trades at the end of the session. And then finally, I'll show you the results using the modification. Just before we look at that though, if you're looking for more trading ideas, more strategy ideas, then you can download my 22-page Beat the Market Strategy Guidebook. And in the guidebook, I've outlined 3 more trading strategies. They've got all the rules and all the backtest data in there. And at the moment, if you find the link down in the description, you can download that immediately and absolutely free. And for those of you who want to take your trading to the next level, you might want to enroll in my popular trading course. Amongst all the other trading lessons in there, I've actually outlined 6 more rule-based trading strategies. And as a bonus, for those of you who are using multi-charts or TradeStation, I've actually given you the code too. You can find out more about how that course will benefit you, also if you find the link down in the description. Now, let's go and have a look at the day trading version of this strategy. Now we're going to be looking at the version which exits trades at the end of the day. Actually, let me just scroll back so we can see some trades. Here we go, look, end of day exit, end of day exit. So this is our day trading version. Same entries, but different exits. Looking at the performance report, that's what the equity curve looks like. This is data right back to January 2008. And you can see also we're making new highs. We got a much smaller average trade now, obviously, because we're holding trades for a shorter amount of time. Looking at the annual period analysis, we can see that 2021 was also a losing year with this version of the strategy. But then 2022 was pretty good. 2023 made money, and currently we're only 3 trades in, but we are making money in 2024. As I did last time, let me switch the data beginning in January 2021 so we can see just the out of sample data to see what that performs like. We already know what that looks like. There's the equity curve, not too dissimilar to the multi-day version of the strategy. It really picked up through this period and is making new highs currently. Looking at the total trade analysis, the average trade is actually much lower than using the whole data set, suggesting that this day trading version may have got weaker. And the last thing I want to show you in the next workspace is a modification where we've actually adjusted our time window. Remember I said we only take trades from 1700 through to midnight, so that's the start of the Forex session through to midnight Eastern Standard Time. Well, this time I've adjusted it to start the timed window at 18:30, so we're going to wait 90 minutes after the start of the session. And in real trading, what that does is that avoids some large spreads which we can see at the start of the Forex session. So we've narrowed our time window to 18:30 through to midnight. And let's look at the performance report. The results aren't going to be too much different. We're looking now at the multi-day hold strategy. We can see equity curves are very, very similar. But the average trade now is $266. compared to before, which was about $220 if you remember. So not only are we getting a higher average trade in the backtest, we're actually avoiding the large spreads early on in the Forex session, and that in turn will make us more money per trade also. So we have mixed results. While the version which holds trades multiple days has actually gotten stronger, judging by the profit per trade, the day trading version, which holds trades only to the end of the session, has weakened. Either way, we can see the strategy does still have that edge, and my original work on the strategy wasn't over-optimized. What I mean when I say over-optimized is I haven't chosen the parameters just to be favourable to the original dataset which I was working with when I started to develop the strategy. When I say the parameters, I'm talking about the length of the Williams %R indicator, the overbought, the oversold levels, time window, stop loss, etc. If I had over-optimized or curve fitted those parameters to the data set which I was using, then it's very unlikely that the strategy would have continued to make any money in the future. For those of you who are interested, I'll leave the link to the original video, which shows you the stages of the development and how I optimized each parameter and what I came up with to complete the strategy. Well, that's pretty much all I wanted to show you in this video. I hope you found it helpful, and if you're looking for a mean reversion strategy for pound dollar, feel free to steal this one. I'm really enjoying going over these older strategies which I've developed and posted on YouTube. I'm constantly monitoring my own strategies, many of which obviously I don't publish on YouTube, but occasionally I do forget about some of the strategies which I created in videos like the original one for this video. I don't trade all the strategies which I've developed for these videos myself in my live portfolio. Some simply aren't good enough, and I'll explain that in the video, but some of them which are good enough are very similar to ones that I'm already trading in my live portfolio. So adding those to the portfolio would mean there'd be too much correlation to the strategies which I'm already trading, so there wouldn't really be much point. But I do find that going over these older videos and older strategies very helpful, and I hope you do too. If you have liked the video and have found it helpful, please give it a thumbs up. Well, I hope to see you next time in the next video. But until then, this is Jared Goodwin, and thank you.